The letter was waiting at the end of the driveway. Frank Aldridge saw it from the porch before he even walked down to get it. The bank's logo in the top left corner of the envelope was visible from 20 feet away. He had seen that logo on enough correspondence over the years to know the difference between a routine statement and something that required sitting down before reading. He sat down. The letter was 3 pages. The first page was professional and direct in the way that letters are professional and direct when the institution sending them wants to appear reasonable before telling you something unreasonable. It explained that following a comprehensive audit of legacy loan accounts, a balance discrepancy had been identified under Frank's name. Outstanding balance. Those were the words they used. $73,000. Frank read that number twice. Then he read the explanation that followed. Payment records from the early years of the loan were incomplete in the bank's current system. A balance had accumulated that, under the terms of the original loan agreement, remained the responsibility of the borrower. The letter said he had 45 days to respond before formal collection proceedings would begin. Frank set the letter on the kitchen table and looked at it for a long time. He was 68 years old. He had been paying the same farm loan for 26 years, every single month, on time, without exception. His wife Norma had kept the records the way she kept everything, carefully, completely, without gaps. 2 filing cabinets in the back room organized by year, every statement the bank had ever sent them, every payment confirmation, every correspondence. Norma had passed 3 years ago, but the filing cabinets were exactly where she had left them. Frank stood up from the kitchen table, walked to the back room, and opened the first cabinet. He was going to need page 4. Frank Aldridge had bought the farm in 1996. 180 acres in central Indiana, flat land, good soil, the kind of property that rewarded patience and consistency more than inspiration. He had financed the purchase through Consolidated Farmers Bank, a regional institution his family had done business with for 2 generations. Fixed-rate loan, 25-year term, same payment every month. He had made the first payment in February of $1,997. He had made every payment after that on the same day of every month for 26 years. Norma had set up the system in the first year. She was an organized woman in the specific way that people become organized when they understand the paperwork is not administrative tedium but actual protection. Every statement that arrived from the bank went into a manila envelope labeled with the month and year. Every envelope went into a hanging file labeled with the year. Every year went into one of the 2 filing cabinets in the back room, in order from front to back. She had explained the system to Frank once, and he had never needed her to explain it again. When Consolidated Farmers Bank was acquired by a regional holding company called Meridian Agricultural Partners in 2018, Frank had noticed. New logo on the statements, new account numbers, new phone number on the correspondence. He had updated his records accordingly and kept making his payments. He had no reason to think anything essential had changed, until the letter arrived with the bank's logo in the top left corner and the words outstanding balance and $73,000. Frank had called the number on the letter the morning after it arrived. He had waited 19 minutes before someone answered. The representative had been polite and unhelpful in equal measure. She confirmed the balance, confirmed the deadline. He said that payment records from before 2004 were not fully available in the current system and that the identified discrepancy reflected that gap. Frank asked what he was supposed to do about a gap in their system. The representative said he could provide documentation of payments made during the affected period. Frank said he had that documentation. The representative said he could submit it through the online portal or mail it to the address on the letter. Frank said he would be speaking to a lawyer. The representative said that was his right. Frank hung up and looked at the 2 filing cabinets in the back room. Then he opened the first one and started at the beginning. Her name was Margaret Solis, 57 years old, Terre Haute, Indiana, 31 years handling banking and consumer protection law, the kind of lawyer who had seen the specific pattern of large institution acquiring small bank, losing historical records in the transition, and then pursuing balances on accounts that had actually been paid, often enough that she no longer found it surprising. Frank called her office the morning after his call with the bank. She came to the farm 2 days later. Frank had spent those 2 days going through the filing cabinets. He had pulled every statement from 1997 forward, organized them chronologically on the kitchen table, and cross-referenced each one against his payment records. By the time Margaret arrived, the table looked like a financial archive. She sat down across from it and started reading. She was methodical and unhurried. She did not comment as she worked. She simply moved through the documents one year at a time, checking statements against payment confirmations, noting dates, amounts, account references. Frank made coffee and stayed out of her way. An hour and 20 minutes into the review, Margaret stopped. She picked up a statement for March of 2001 and looked at it more carefully. Then she reached back into the pile and found the statement from February of 2001. Then January. She set the three statements side by side. Frank came over. Margaret pointed to a line near the bottom of the March statement, a charge listed under account maintenance fees. $31, labeled Rural Servicing Adjustment. Frank looked at it, said he had never paid much attention to that line. Margaret said, "What about this one?" She pointed to the same line on the February statement. $31, same label. Frank said it had always been there. Margaret reached for the original loan agreement from the back of the first filing cabinet. She turned to the fee schedule on page 4. Read it carefully. Then she read it again. She looked up at Frank. "This fee is not in your loan agreement." Frank frowned. "What does that mean?" Margaret set the loan agreement beside the March statement. The fee schedule on page 4 lists every authorized charge associated with this loan. She ran her finger down the page. Rural Servicing Adjustment is not on this list. It was never authorized. It was never agreed to. Frank looked at the two documents side by side. Margaret said, "How long has that charge appeared on your statements?" Frank said he wasn't sure, since early on, he thought. Margaret said, "Let's find out." They went back through the filing cabinets together. Frank pulled statements while Margaret checked the fee line on each one. They worked backward from 2001, then forward through every year after. The charge appeared for the first time in January of $1,999. It appeared every month after that without exception. 24 years of statements, 288 months, $31 each. Margaret did the calculation on a notepad. $80,928. She set the pen down and looked at Frank. "That is what they charged you for something that was never in your contract." Frank looked at the number. Margaret said, "But that is not the real problem." She reached for the original loan agreement again. When a creditor applies unauthorized charges to an account over an extended period, those charges affect the loan balance calculation. She turned to the amortization schedule. If $31 per month was being applied incorrectly for 24 years, the balance figures the bank was working from were wrong from the beginning. Frank said, "How wrong?" Margaret picked up her pen again. She worked through the calculation slowly, checking it twice. When she finished, she looked at the number for a moment before she said it. "Frank, you don't owe this bank $73,000. Frank waited. "According to the correct figures, your loan was paid off 14 months ago. Margaret set the pen down. "The balance they are claiming does not exist. It is a product of 24 years of unauthorized charges compounding against your account." The kitchen was very quiet. Frank looked at the filing cabinets, at Norma's handwriting on the labels, at 26 years of careful documentation sitting in two metal cabinets in the back room of a farmhouse in central Indiana. He said, "She always said we might need them." Margaret looked at the cabinets. Then she said, "She was right." Margaret filed the response on a Monday morning. 38 pages. Every unauthorized charge documented by month and year, the original loan agreement with the fee schedule highlighted. The mathematical demonstration that the loan balance the bank was claiming did not exist under the correct figures. A formal complaint to the Indiana Department of Financial Institutions alleging systematic misapplication of unauthorized fees over a 24-year period. And one additional filing that Margaret had not mentioned to Frank until it was ready. A class action inquiry request, submitted to the state banking authority, asking whether other accounts held by Meridian Agricultural Partners showed similar unauthorized charges during the same period. Because $31 a month on one account was one thing, $31 a month across hundreds of accounts over 2 decades was something significantly larger. Meridian Agricultural Partners received the filings on a Wednesday. Their legal department called Margaret's office the following Monday. The call lasted 40 minutes. Margaret called Frank that evening. She told him the bank had requested a meeting. She told him what she believed they would offer. Then she told him what she thought he should ask for instead. Frank listened without interrupting. When she finished, he said, "What about the other people?" the ones who might have the same charge on their statements. Margaret said that was being handled separately. Frank said, I want to make sure it gets handled. Margaret said it would. The meeting took place at the county offices on a Thursday morning. Frank on one side of the table with Margaret beside him. Two bank representatives on the other side with their attorney, a careful man named Sutton, who spoke precisely and made no unnecessary movements. The bank opened by acknowledging that a review of Frank's account had identified certain discrepancies in the fee application history. Margaret said the word discrepancies did not accurately describe 24 years of charges that were not authorized by the loan agreement. Sutton said the bank was prepared to discuss resolution. Margaret slid the proposal across the table. 4 points. Complete discharge of the claim's $73,000 balance. Full refund of all unauthorized charges applied since January of 1999, totaling $8,928. Statutory damages under Indiana Consumer Protection Law, and a written commitment for Meridian Agricultural Partners to conduct a full audit of rural servicing adjustment charges across all legacy accounts acquired in the 2018 Consolidated Farmers Bank transaction. Sutton read the proposal, spoke quietly with the two representatives beside him. Then he looked at Margaret. The audit commitment is outside the scope of this meeting. Margaret said, then we go to court and the scope expands considerably. Sutton looked at the proposal again. The room was quiet for a moment. Then he picked up his pen. The settlement was signed before noon. Frank signed after him, line by line, the way Norma had always told him to sign things, slowly, reading every word. Then he stood up, shook Margaret's hand, picked up his jacket, and walked out into a Thursday morning that felt different from the Thursday morning 3 weeks earlier when he had sat down at the kitchen table with a letter from the bank and the word outstanding and the number $73,000. The unauthorized charge was removed from the account records within 10 days. The refund arrived 2 weeks after that. The audit commitment produced results that neither Frank nor Margaret had fully anticipated. Over the following 4 months, Meridian Agricultural Partners reviewed legacy accounts from the 2018 acquisition. The rural servicing adjustment charge had been applied to 214 accounts. In 187 of those accounts, the charge was not authorized by the original loan agreement. 187 families, 24 years of $31 monthly charges that were never supposed to be there. Because of a number on page 4 of one loan agreement, sitting in a filing cabinet in the back room of a farmhouse in central Indiana, in a manila envelope labeled March 2001 in Norma Aldridge's handwriting. Frank drove home from the county offices alone. Same road he had always driven. Same flat Indiana fields on either side, quiet in the late autumn, the harvest already in, the ground resting. He parked in front of the farmhouse and sat for a moment. Then he went inside, walked to the back room, and opened the second filing cabinet. He found the folder labeled Current Year and added the settlement documents to it, closed the cabinet, straightened the label on the front the way Norma had always straightened it so the writing faced exactly forward. Then he made coffee and sat at the kitchen table. Outside, the fields were still, the same fields he had worked for 26 years, the same land Norma had kept the records for, month after month, year after year, every statement filed, every payment confirmed, every document in its place. She had told him once, early in the first year, why she kept everything so carefully. He had asked if it was really necessary. She had looked at him in the way she sometimes looked at him when she thought the answer was obvious and was deciding whether to say so. Then she said, Frank, the paper is all they can't argue with. He had not thought about that conversation in years. He thought about it now. Some people fight back with lawyers, some fight back with money. Some fight back with connections and influence and the particular advantages that come from knowing the right people. Frank Aldridge fought back with 2 filing cabinets and 26 years of his wife's careful handwriting, and one number on page 4 that was never supposed to be there. If this story meant something to you, subscribe, hit the bell so you never miss what comes next. We will see you tomorrow.